Hey guys, welcome back to the channel. So in my previous comments, you all wanted to know what indicators I had on the chart. So it's an indicator I got from the MQL marketplace. And the other one is just a typical moving average I added onto the chart. So let me show you how you can get the same indicator. You head on over to market indicators and you're going to change this here from most rated to free. And this is the indicator right here, BB Engulfing Bar version 2. Select it. The indicator defines the bullish and bearish engulfing bar. They are reverse price action signals. Right? You download it, add it onto your chart, and when you look at the settings, the only two things I changed in the settings is for the faster moving average. I put the period on 21, changed it to smoothed. You can set this to whichever one you prefer. And the other moving average, I set it to 200 and smooth it again. As for the engulfing bar, the system will do its own thing. The next indicator, moving average of 50 period. Just for me to get like a in the middle type of trend, we have here the overall trend of the market. And these two smaller trending moving averages that I use for confluence. And so let's have a look here. This is a 20 pip box. This is a 20 pip box here. And as we can see, there was a bearish candle here. Let me zoom in a bit. We had a bearish engulfing candle. So that is technically a signal to sell. But you should always analyze the chart properly and see if you should take that sell or not, because not every sell is to take. This sell, however, I would have taken it because all the moving averages were crossed to the downside and we had a nice sloping trend for the past few days forming here. Let's put it. The signal came in. The market retraced up to like around 10 pips, 11 pips around there. Your stop loss, well, my stop loss would have been at 15 pips, right? And as we see here, you exited the trade around this mark. You got your 20 pips for the day. If you look at another example, around here, I'm not too sure if I would have taken this trade. Let's see. Would I have taken this? Yes. I got the sell signal at the same time the moving average cross was just about to happen. So it would have been a safe entry to take, and you'd have been out with 20 pips rather soon. Do we have any buy examples? Shift this around. We have a lot of sell examples going on here. Even if you don't get 20 pips, you were sure to at least get 10 pips here. Yep, that's 14, 13, 10 pips around this mark here. I'm looking for buys. Not every signal is to take because this is a good buy signal here. I wouldn't have taken it because everything started sloping back down to the 200 moving average. So it could have potentially go the next way and take me out in my 15 pips. But coming down here to the start of this day, the 2nd of September, we had this trade you could have taken here. Everything, it was just now starting to break out to head to the upside. It would have been a bit risky, I must say. But if you bring it down, it went down to negative 6 pips, 6.7 pips. And eventually it would have taken you out of your trade around this mark here. You'd have sealed the deal. Even this wouldn't have hit your stop loss. So you just gotta be careful with taking these entries. Even here, this is a lovely one. You got a signal? Lovely. The moving average cross here. You had a previous cross here as well. This is just a beautiful trade to take. And this could have even gone for about 30 pips. Let's see. Yep, that's about 35, 36 pips around there. But so that's about it. Always look at the moving average, the general direction of the trend, and if you get a engulfing candle in that direction, you can take it, but be sure that the trend is actually nice and smooth going up and not consolidating, not doing this, not giving you sell signals above the moving averages or taking buy signals below the moving average. Those things don't make sense. You're just chasing the market at that point. And that's about it. Try it out and let me know how it goes for you all.